that there are trillions and trillions of dollars outside the US, and those dollars are an IOU nothing. At some point, if somebody decides, if a panic hits, that they don't want dollars, all you can do is take those dollars back to the US, and trillions of dollars that are abroad flow back into the US. Domestic prices in the US explode, and the amount of real wealth in the US will be purchased by the foreigners that own those dollars now. So the standard of living of the average American could collapse very quickly.
The US dollar has been the world's principal reserve currency since the end of the Second World War. It is the most widely used currency for international trade and other transactions worldwide, and the most commonly held reserve currency. As the issuer of the world's reserve currency, the United States enjoys a lofty status as it is able to borrow money at low costs and impose painful financial status on other countries. The use of the dollar as a tool for controlling other countries is precisely why experts believe its status as a world reserve currency is now threatened. For example, data from the US Treasury Department show that China's holdings of US Treasuries reduced by 40% in the decade leading up to August 2023, from a high of $316 billion in 2013 to $805.4 billion in August 2023. Like China, other foreign government investors also reduced their holdings in US government debts last year, amounting to a total dump of about $39.1 billion in October. Analysts believe foreign investors are showing less preference for US Treasuries due to concerns about the US government's increasing federal deficit and the global move toward de-dollarization. According to popular American writer and speculator Doug Casey, the situation will continue to worsen until countries are actively dumping trillions of dollars on the domestic market. With so many dollars moving around, the currency will become further debased and prices will go off the charts. While this presents a cause for concern, Casey is more worried about the government's expenditures, as it spends way more than it earns. Casey believes all of these factors will negatively and significantly impact many Americans in the very near future. That's why he urges everyone to prepare by investing in gold, silver, and one other asset. We will present clips from Doug Casey's interview with Silver Bullion TV. As we do, please watch, like, and share this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thank you, and enjoy the video.
Absolutely. I mean, this whole idea of having a national currency, a fiat currency, I mean, it's actually destructive and ridiculous. People forget that up until 1933, gold coins were used in day-to-day commerce. And a US $20 bill represented a $20 gold piece back in those days. Then Roosevelt devalued the dollar, and since then we've had a complete fiat currency, which has lost, well, depending on the date we pick, 95%, 98% of its value. The problem that the US has right now is that the economy is absolutely buried in debt because look, two things are going on in the US. Number one, the US government is running annual deficits of $2 trillion, something on that order. But where does the US government get $2 trillion for its deficits? They used to say, well, don't worry, we can borrow it from ourselves, but they can't sell any more T-bonds and T-bills to Americans. Then they were selling them to the Japanese and the Chinese and other foreigners, but they want to get rid of these US dollars. They're viewed as hot potatoes. So the only place the US government can get dollars to pay its debt is by selling its bonds to its central bank, the Fed. Then the Fed deposits in the US government's accounts with commercial banks, Citibank, whatever, new Federal Reserve units to pay for the bonds that it bought from the government. So that's one thing that's driving inflation. Second thing that's driving inflation is the fact that we have a fractional reserve system in the US for banks. And it's true all over the world, where if you deposit $1 in a bank, The bank can lend that dollar again and again and again. When it's lent to a businessman, because that's how banks make money, take dollars in at 3%, lend them out at 6%, take the spread. But when the dollar is redeposited by the businessman it was lent to, then it can lend it out again and lend it out again. So that it's like an inverted pyramid, and it's very unstable. Now, look, I don't know if I've given a good explanation of how this works, but the end result is we're buried in tens of trillions of dollars of debt. And at some point, we'll find we don't owe it to ourselves. Some people are not going to be able to pay other people, and the whole inverted pyramid of debt can collapse. Now, this gets back to your question about interest rates. If they lower interest rates, it becomes easier for people to pay their debt and for things to keep going. On the other hand, if they do that, inflation, which is, say, the rise of consumer prices, goes way up. So they're in between a rock and a hard place. They can raise interest rates and slow down the rate of currency debasement, or they can lower interest rates, which rises it but fends off the danger of a credit collapse. So I don't think there's any way out for the U.S. government and the Federal Reserve at this point. We're heading for an economic catastrophe.
Casey warns that the U.S. is heading for an economic catastrophe of world historic import, a meltdown that many have compared to the Great Financial Crisis and some to the Great Depression of the 1930s. Such a crisis will have a noticeable effect on all categories of investors. Asset prices will decline sharply, businesses and consumers will default on their debts, and there will be widespread liquidity shortages. Experts like Casey have also warned that a financial crisis in current times will be much worse than anything we've had in the past because of the massive amount of leverage in the system. Unfortunately, if past crises are any indication, the Fed will resort to money printing to save the markets, which will only escalate the situation as it would significantly increase inflation. Let's get back to Doug Casey's interview.
People can sense, even if they don't understand economics, what's going on. And they realize that the dollar is a hot potato. It's the unbacked liability of a bankrupt government. And you don't want to hold dollars. So what are your alternatives? Well, you can go into the stock market and speculate there. And stock markets all over the world have been doing well. There's lots of money have flown in into stock markets because at least stocks are real assets, productive businesses. But when it comes to actually holding money, what are your alternatives? Well, they're basically gold and silver, and I've got to say Bitcoin, which is actually proving itself as being a viable money. My thought is that more and more money is going to flow both into the precious metals and into Bitcoin over the next few years. It's going to get out of fiat dollars, which are being inflated out of existence, frankly. When Costco and Walmart start selling gold, it's telling you that the average guy is getting hip to what's going on. Because the average guy doesn't want to get involved in the stock market because he doesn't understand it, quite frankly. I mean, who's got the time to analyze the balance sheets and the income statements of the thousands of companies that are in the stock market? Well, most people don't want to take the time and trouble. And if you produce more than you consume and save the difference, what are you going to save it in? Speculate in the stock market? No, you want to have something that's viable that you can hold in your hand. Gold and silver. I think they're going much higher. And you said, Patrick, that silver's only half of its previous all-time high, which is about $50 an ounce, which has hit a couple times in the past. But in real terms, because you can't look at the dollar, it's a floating abstraction. Silver's only a quarter, a fifth of its previous high. So it's got a lot of upside potential. And the same is true of gold. In real terms, the previous high of gold was actually at $850 an ounce back in 1980. But $850 an ounce in 1980 is like $3,000 an ounce today. And the world financial situation is much more dangerous than it was even back in 1980. So that, yeah, it's going to go to 3,000 and beyond on this run, I think. There shouldn't be any antagonism between gold guys and Bitcoin guys because you need both in your portfolio. And a lot of Bitcoin guys are starting to understand gold, and they didn't understand it before. It's an alternative to the fiat dollar or the fiat pound or the fiat euro or whatever. In today's computer-driven and electronic world, it's a good complement to gold. And you really should have both.
Doug Casey makes a case for investing in gold, silver, and Bitcoin. While he recognizes that only gold and silver have served as real money for thousands of years, he explains that gold has some limitations that make it less desirable than a digital asset that can be easily transferred to all corners of the world. Do you agree with Casey that at least a small portion of a person's investment should be in the leading digital asset? Please share your comments and observations with us in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.